Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, October 23rd, 2019. I'd like to get this video out to you guys before the close. Not anything really super timely or very actionable. A couple things that are actionable today, actually, and I want to share those. And we'll start out here with, pretty much I summed up my thoughts this morning in the last paragraph on the charts I'm watching. Saying, I pointed out the potential bear flags on the futures, but I've made clear that, they're probably not going to play out as such, basically because of earnings. Again, we have Microsoft after the close today, and then Amazon and Intel tomorrow. And I've done this long enough to know that barring any big market-moving headlines, the market goes into a holding pattern before you see big earnings like that, just like the Fed, just like a Fed announcement, a big rate decision, one which could go either way. The market, nobody wants to make a big move. Why would you want to take a big position, long or short, unless you're a gambler? And the professionals aren't gamblers. Sit back, let the charts, let's see where these stocks go. It's Microsoft just kicks off the fangs, and then you have, again, like I said, Intel, Amazon. We have Apple next week. There's going to be a lot coming up. So let's take a look at the charts, and I'll try to get it out to you guys before the close today. So here's what I mean by grinding around. This is exactly what you got. So you can take a day off unless you're trading other things, and I'll get to that in a second. There's been some trades to make today on platinum and a couple other things. Crude's moving. I'm going to get to crude oil in this video. I've had some questions on that. Nat gas. Actually, let me add that to my notes. I forgot to write that down on my notepad here. I had a couple questions I answered today. So this is yesterday's close. So here's what's happened today. Now, first of all, it might look like a lot big chart. We're looking at a 1 minute chart. QQQ is virtually flat, up or down 0.13% as I'm doing the video, and this is what I'm talking about, grinding around. So good luck to you if you're gonna make money off this and QQQ today. This is what we mean, and the yellow line again is that's a flat. The flat line right there, that's yesterday's close. So you can see the market's gone green, red, but just stayed within this very, very tight trading range today. So enough on that. That's just takeaway as to what days you want to look for potential trades, and that's why, again, I said I'd be remiss not to point out those 60-minute flags, but the odds of them playing out because of Microsoft being on deck and Amazon was pretty low for that reason. Alright, so we'll go through this. Already addressed NQ and ES. Want to go through that post again, this morning's charts I'm watching. Russell, again, you have a pattern there, potential sell signal, but again, you're unlikely to go very far. Small caps aren't going to go very far without the large caps moving as well. Treasury bonds, that was all there. One of the most actionable trades today was this, well, there were two actually. Palladium, and that was posted right here, break below 1718. And then I've encouraged you guys, if you're interested in anything on a front page post, remember the comment section below for two reasons. We want to keep this on task. So I've added a little bit of text here to the box. If you want to input something, it says join the discussion. Questions on securities not covered or related to the post above must be posted in the trading room. Real quickly, that's for two reasons. A, to keep things on topic, so these comment threads don't go all over the place. Netflix had nothing to do with, I'm just using an example of, what was posted today. Now, if you want to post something similar, I posted palladium here and gold. Platinum is another precious metals. Now, I happen to follow up with platinum right here later in that post. And again, by subscribing to these post comments, I'm still beta testing this software, and if you guys notice any bugs, sometimes I'll notice that if I make a comment and I navigate away from the page, the site will temporarily crash for me. It's just overloading the server. I've addressed that with a programmer to try to get that bug worked out. But I wanted to mention that if you want to follow anything on here, if you're interested in gold, platinum, precious metals, then subscribe to it here. I've already subscribed to this thread, and you can do the same, and you'll get an email anytime a new comment's posted here. So, for example, I posted that jokingly, hey, guess I showed you guys the wrong 60-minute precious metal chart, showing you gold in a triangle pattern. But platinum, also, I had a triangle pattern on platinum. I didn't expect it to break out today. I wish I could tell you I saw that breakout occur and jumped on long. I didn't, but if anyone did, it's a pretty clean trend line, a pretty clean triangle. Broke out and exploded. That's a big move in platinum today. And so what I said there, and I'll still maintain, I have the target there, the resistance level, pretty well defined, is about 926. So I think if it gets closer, I'll tell you, I have an order that was missed by 0.2%. I put an order to short platinum at 924.20. We hit hit a high of 924 so far. Now I'm looking for, and somebody asked me, what are my pullback targets? And I said to them, at this time, I'm just looking for a reaction off that level, although depending on what I see in gold, I may actually hold out for, I told him I think it was around 907. I'm going from memory here, and I'll show you why. There's some resistance, or now support, about right here, give or take. It's not super well defined. Yes, you have a reaction high here around 911, so that would really be an ideal pullback target zone. We might not get that much of a pullback, and as I often say, if 926 is the resistance level, I expect a reaction. Had I been long, I wouldn't be waiting to, get, I'm rounding off here, let's say 925, 93, round that up to 926. I wouldn't have a sell limit order at 926. I'd be selling it at maybe 924.50, or like I said, 924.20 is where I look to reverse. Now I may have, so far I've just missed that. Like I said, the high today was 924. Maybe it reverses. Why? Because to me, if a level's so obvious that a lot of people can see it, to me that level stands out as a pretty obvious resistance target level for at least the initial run up, especially when you're this near-term overbought. Then what'll happen is longs will start to take profits, sometimes step in early, take profits a little early, or short sellers may step in and short it early as well. The sellers may come in. So if we get one more thrust up, then I may be short that one with a stop somewhat above, and again, either go quick pullback trade or hold off for maybe a move back down to that 912 to 907-ish level right there. And what I had said in that reply as well, I believe that was in the trading room, it depends on what gold does. And gold's a precious metal. Gold's in this triangle. So, for example, if I get a short entry on platinum, and at that same time, gold breaks above this trend line, breaks above the secondary. You can see I have this triangle here. You have it in yellow. You can see if you zoom in closely, I have 3 different downtrend lines. I think they're all valid. That's why they're all there. You have this blue trend line here. You have a white trend line here. And I didn't hit it perfectly. You can see it right here in the yellow trend line. So we broke above the yellow trend line, came up to that white one. You can see reactions there. And so if I start to see gold lifting up, then I would jump out of a short. I would take a very quick profit on any short that I make on platinum if I'm not stopped out first. Otherwise, if I see gold start to drift back down now within the triangle, maybe make another run at the bottom of the triangle, then I would hold out for those relatively longer pullback targets. So as I like to say, the charts are dynamic, and so is my analysis. So that's one potential trade op for you. And then of course the other one was palladium, which I posted a break above that 1718 level. Shortly after that post this morning, it did break down. It did hit that, well, I should say, I had on that chart shown a target zone here from about 1670 up to about 1677 or so. And then again, and this is another reason why you want to check the updates, I went ahead and added an update right here. PA broke down, and I gave you another support level where we might get a reaction, so you could take quick profits. That was a 1% drop after the break of 1718. If you trade PA, I don't have to tell you this, but that's a big move. That's $1,700 per each contract, $1,700 gain. So there's an objective level to take quick profits for a quick trade and maybe enter back on a bounce, and that's what's happened so far. And so my scenario is this. Let me go back to the current chart. There it is. There was that level right there I added before. It's at 1705. So had you been subscribed to the notifications, you would have got that. I didn't really, I noticed that level before, but I hadn't had a line there, so that's why I followed up with that post. And sure enough, that's where we bounced today. And this is TA 101 so far. Doesn't mean it'll continue to play out, but almost a perfect back test of that 1718 level. We hit a high, I think it was 17. What was it? 17, 16. I thought it was a little closer than that. I have to go to a 1 minute chart to look. I think it was 1780 or something like that today. So real close, and that has right now, even as I'm doing the video, we're still relatively close. That would provide a second objective shorting op with a stop somewhat above the 1718 level. I'd say anywhere from about 1720 up to maybe 1722. You're talking 4 points versus if it comes down here, and that would be again a relatively tight stop for a drop, which would be 25, that 35, 40 plus points. That would be a really big drop in palladium. Otherwise, palladium has been resilient. Let me tell you that. It has been just little corrections, shrugging off divergences. You can see in that chart I laid out earlier today, should this be it for the correction and we gain that level back, we may go on, and that's why I had this divergence drawn out here. These are potential divergence lines, and that would entail another high, marginal new high in PA, and then at which point, if I do, by the way guys, if I do see a high probability swing trade entry, that will be an official trade. Then I'll come out with targets. I had several questions other members asked, which again, it's in the comment section below this post. Hey, how do I trade platinum or palladium? I don't trade futures. Then another member had answered, and I've covered this before, PALL. In fact, if you just use the search function on the site, you'll see my other analysis on PALL. This is to the best of my knowledge, the only ETF that's a direct play on palladium prices. And you have this price channel here on the daily chart right there with a divergent high. And if and when that breaks, we're probably looking for a pullback, maybe coming back test this downtrend line here. And that would be a decent drop in palladium. That would be about, from where we're at now, give or take, depends on when it gets there, about 10, maybe 11, 12%. And if that starts to pan out, I'll identify some other potential targets on here as well. Okay, and we'll get away from palladium. I just want to mention after that reply with the support where you might get a bounce off that level right there. Then I followed up again once we hit that, once we had back tested. There it is, about that 1780 level, offering another objective short entry on palladium or PA palladium futures. Okay, on a related note, talking about the comment sections on the front page, did have a question today. Was it here or somewhere else? One of the other posts, an inquiry about Tesla. Well, I had another inquiry in the trading room as well, and I'll mention that. But my reply there, look, if and keep these comments on task. If a security is not mentioned in here and you have a question about it, you can ask that in the trading room. Twofold, to keep the comment section on task, number one, on topic, and also it's a chart request, individual chart requests. That is a benefit of a gold membership, and that's why a gold membership costs more. It takes a lot of time. I do a lot of put a lot of effort into when somebody asks my opinion on a chart, marking it up, providing levels if I have a strong opinion, price targets, things like that. And so I ask that if you have that question on any security, it's not covered on the front page. As a gold member, you can post that in the trading room, and I'll do my best to get back to you as soon as possible on that. Now, with that being said, since I've had a couple inquiries on Tesla, let's talk about that one. They report tonight. That's also a big earnings report. Here's the weekly chart. I've shared this many times in the past, over the past couple of years actually. And what stands out to me, you guys remember that price channel on QQQ that I've been highlighting recently? Well, I've had a similar thing here on Tesla, and with Tesla we have a large sideways trading range. this is for years now. Early, this is the beginning of 2014 right here. And you can see since 2014, Tesla has a very clear pattern on the weekly chart of trading in these ranges here. And just like a price channel, when you break above a range and you start a new range here, and what we did here is we traded back. So that was really 2014 to right about the beginning of 2017. It's weird how these are the year breaks line up right almost perfectly with these trading ranges. And then from early 2017 all the way until right here, and it was posted at the time on the site, we broke down. And so at that point I said, well, your next logical target would be the bottom of the that previous price channel, which is also support here around 180.16, and that's almost to the button where we hit. So this is a stock that, although there's a lot of buzz about the fundamentals, is Tesla going to go away? Do they have a viable business model? Blah blah blah. I do like fundamentals, and I'll apply it to some securities, but I can tell you on this one right now, it's a whole lot easier to gauge where the stock is going based on the technicals. So where we go today, I don't know. It's a crapshoot. But I can say this, that if Tesla, if the numbers are good and the market likes what they hear, because I should clarify that. I put a little asterisk by where I say if the numbers are good. It doesn't matter what a company reports, whether they beat or miss expectations, whether they give rosy or dismal guidance. All that matters is the street's reaction, because very often all known variables are priced into a stock, because I've seen companies blow the cover off the ball only to get sold into and mark a major top in the stock. Apple has a pretty good history of doing that over the years. I mentioned that today to somebody. I traded Apple for many years, and I've seen quite a few earnings reports where the stock is trading at an all-time high or a multi-year high, blow it away, rally that day, rally big in the after-hour session, only to see the stock peak either the next day or that day, or within the next few days, a few sessions, a week or so, and then really start a major correction from there. Not always. It's not something you can bank on, but just keep that in mind. My point being, it is not the initial reaction, and it's not really so much about the fundamentals. Its most important thing is what is the market's reaction to a stock. So we'll watch Tesla, and from a technical perspective, if it gets above here, can hold above there, then chances are it's going to take back that old trading range, and then you could say, you revert to the old MO. The modus operandi, when trading a range like this, it's pretty simple stuff. You buy pullbacks to the bottom of the range, you go long or cover your shorts, and you sell rips to the top. And then with your stop somewhat above, because one day maybe Tesla breaks out of the top of the range, and so therefore you don't want to keep shorting and selling your longs every time. If you're short, you have a stop somewhat above. And likewise, if the stock were to be rejected after earnings, you can short it. It depends where it goes. It's going to have a big move after hours. So, stop should be a little bit above. And you can, when you zoom in tight, so you have to give it room. It's a volatile stock. That's why when you use a weekly chart, all that matters really are your weekly closing candles. Intra-week, sometimes you get these rallies above and rallies below. So these aren't hard lines. So you can't put your stop at 253.78, if you're short, or go long, But you can go long around this level with a stop somewhat above, and just calculate the risk reward when you do something like that. So if you short on a pushback to about 253 or so with a stop somewhat above, your target would be ideally be the bottom of the range. You're talking a 70 point plus drop, and then you can allow yourself a 20 or so point stop, and that gives you better than a 3-to-1 RR. So we'll watch Tesla, and again, let's see what happens after the dust settles after earnings. If we come back into the range, and it's probably going to come back down to the bottom, and again, anytime it breaks the upper level here, it will probably will re-enter this other previous zone and maybe work its way back up there. So that's Tesla. Overall posture, the PPO is bearish right now. It's below the zero line. You did put in a divergent high at that last high right there. There's your negative divergence, and of course that's already played out for a pretty decent correction in the stock. All right, enough on Tesla. Let's look at MJ and the marijuana stocks doing well. Still a little more work. It's still an active trade. Remember, it triggered. Somebody asked in the trading room today, hey, is it triggered? It triggered, and I posted again in the comment section below the trade setup for MJ. MJ was posted as an official trade last week to be triggered on the next pop above 20. It had already moved above 20 that day. That was Friday. Then Friday it moved back above 20, so it triggered an official entry, pulled back a little. It has a little more work to be done, although 20 to me was the sort of the magic number back then that I thought would spur more upside. That the bar has been raised a little bit, because if you look here, it's now pushing up against, let me give you the hard number, it's pushing up against right about here, about 20, we'll call it 2030. So, if you're in it, I think this trade works out. I still like it. It's above the trend line. It's broken out, but it's not the kind of price action you want to see following a breakout. You want to see more impulsive. But now you can see what's happening here as I zoom in. 1, 2, now 3 candle tags of about that 2030. That should do the trick, because it's going to clear out all this. We're going to break above this near-term resistance, and that should open the door for a nice short covering rally. So there's a little more work to be done. But remember, this isn't a downtrend, and so far, downtrend line aside, this is nothing but a counter trend bounce, and the stock could take another leg down. So just like anything, don't get married to it. I like the trade, but again, it's either going to pan out or not, so you decide where your stops are, whether you want to use the official stop or not. A couple others are CGC. That one's broken out. Those looks following through today, up another 2.65%. This breakout looks a little better, but this is only one. I need to see broader participation in the big cannabis stocks. That's CGC, which again by itself looks good, but it's only going to go so far without the rest of the players. So I want to see ACB follow through as well. ACB broke out, but you can see it's been back testing since, moving up impulsively today, but these guys just need that little extra kick. So with ACB, for example, you need to see it had 2 failures here, about 390 or so after the breakout. That's where it really needs to get, and I think if it pops there, if CGC can continue to rise, that should finally start to spark that short covering rally. The shorts that are in here are probably nervous about this little consolidation now. They're hanging tight, but you get above there and they're going to start to get squeezed, and that should then trigger a pretty good move up. But again, they're in a downtrend, so a lot of trade setups fail to materialize and play out, and these guys could take another leg down, so do not get married to them. I like the trades right now. I'm still in them personally, but like anything, I'm willing to throw it away if it doesn't pan out. And then finally, Tilray, I can't remember, I think I might have added this one as an official trade. Broke out above this wedge, but it's really, again, not what I like to see. I like to see impulsive buying following a breakout. Big green candle, another green candle would be even better, and a volume expansion, and that has not happened. This is a non-confirmation so far of the breakout. Doesn't mean it's going to fail, but it increases the odds. So these guys need to start, get off the fence here and start moving up, otherwise they may take another leg down soon. Okay, quick update on natural gas. What happened the other day? Was it Monday? I know I was pretty under the weather that day. I think it was Monday. It was a big smackdown. I thought the charts looked good and constructive, and they did. I'll maintain that. What happened was an unusual smackdown. It's not unusual to see nat gas drop 3% in a day. This is UGAS. Let me look at nat gas, the futures, because that's what UGAS and all these ETNs track. But from the 60-minute chart on UGAS, it's close to testing those previous lows, and if it were to do so, you still have the divergence in place. But again, this is a 3-time ETF, and it has decay. Even if you're trading that, and I know a lot of you guys do trade the ETFs, you don't trade futures, you should watch the futures chart, because this is the pure price action. This is what DTNs are rolling. They're rolling different months futures, usually the near month contracts. And then, of course, on UGAS, they leverage it up 300%. But like I said, it was in a pretty decent uptrend. The charts still look constructive. I mean, bigger picture was you had this nice bullish falling wedge pattern. This was really your trend line right here. Minor trend line broke out bullish and back tested right there, and we were stair stepping up. Then we had a little correction there. We hit that target, which at time I know some of you took profit to that 238.90. 239 level, pulled back, and this was a smackdown the other day, about a 3% drop. It's again not unusual to see a 3% drop in crude oil. I'm sorry, natural gas. But that usually comes during the weekly inventory reports, if they come in and catch traders off guard, if it's more bearish than expected. This one was different. There was not an inventory report that day. Those come out, I think it's Thursday. You had instead NOAA came out and said we expect it to be a warmer than usual winter, and boom, that knocked natural gas down, because obviously that's going to, if they are right, it's going to could certainly affect the demand for natural gas, because it's not as cold, you don't use as much heating oil, yada yada yada. However, what happened is since then is we're still above that low. So the breakout, there's still the potential that we're in an uptrend. We're just now, if so, we're going to have we have a series of higher lows. Now we still need to take out the previous highs. So here's my analysis. I think there's still potential there. There was some technical damage done, but didn't completely eliminate the bullish case. What happened is after the 3% drop, we snapped back and recovered all of it. So that in itself is pretty bullish, that we had the potential to bear flag there and have another leg down. We never did. So the fact that we recovered all of those gains, or drop, I should say, that big drop from the NOAA forecast, is somewhat bullish. Shows the buyer step back in, and as I said in the previous updates, we still need to take out that 230-ish level with conviction, not these little intra-period pops. You need to take it out, and you need to see a solid 60-minute candlestick close above there, and then ideally then after that point, especially if we can take out that call it 239 level, that previous high right there, that should, I would imagine, if we can do that soon, open up the next wave of buying in natural gas, probably take us up here more. So the potential's there, but again, could go either way. Just don't, like any trade, don't get married to it. Use your, if you weren't already stopped out, and if you want to re-enter, is now the most objective time? No, but a little bit above, if we can take out that 230-ish level with conviction, that should do the trick to spur us up to the next resistance area up here. Okay, and crude oil. I've had quite a few requests, for my opinion on crude lately. I haven't posted a lot of charts on crude, and the reason, my opinion, it's in a big, sloppy, sideways trading range. By sloppy, it means price actions are irregular and erratic, tough to trade. You can get ground to pieces in trying to trade these ranges like this. But although you can, the MO has been to go long on the bottom of the range. They're about, about 1060, and ride it up towards the top of the range. The top's not super well defined, but again, you can see it. I just boxed it in there for you. That's the recent range. So, and that crude can do that for a long time, or we could break out of the range. So now we are coming off that low, and today we're seeing a nice lift in crude. So let me show you futures, and the energy stocks. My reply to somebody lately, I've been highlighting the energy stocks as setting up as potentially bullish, especially XOP. I'll get to that chart in a second. Nice lift today here in crude. You see this little uptrend line if you're trading CL. This is a 60-minute chart of CL. You can see I've marked some levels here. I have one more I want to add for you right now. These are potential levels. You can screenshot this chart if you want to trade it. We're kind of between there. My guess is a little stretched for today. I don't know if there was a news catalyst or what. Today is Wednesday. Yeah, I probably had crude inventories today, I think. There's a level, support level. We kind of overshot it, probably a momentum fueled overshoot about 55, 54. If we maybe pull back to that level, that might give you an objective long, or back to any of these reaction highs with a stop somewhat above, and or you can continue to buy pullbacks to this uptrend line as long as that works with a stop somewhat below. And again, I just can't make a screaming case. I should have had a downtrend. I think I did. I don't know what happened here. This chart I had to reset all the lines. Every now and then, Interactive Brokers, I'll have a chart running up on futures, and it'll just disappear. The chart will be there, but then the symbol's gone, and I have to replicate the chart. I don't know what that's all about, but either way, there's some levels to watch, and my convictions right now, again, aren't super high on where crude goes, but if it can continue to rally, let me show you some things that do look good. XOP There are three big energy sector ETFs. XLE is the biggest, and that's your big integrated oil companies: ExxonMobil, Chevron, BP, all those guys. This one, it looks, pretty decent here. You have what stands out to me, that trend line's been chopped through. You had a little false breakout here not too long ago, right there, and we fell back below it. But back here, I had, highlighted that bullish divergence, and we did. We got a nice rally out of that. I highlighted the energy stock setting up bullish, and what happened is we came back and we double tested that low. So we have a double bottom low, a potential W pattern forming, bottoming pattern here. If you look at it this way, you see the shape of a W right there, and so with that forms like that, then we might be looking later on at a breakout above that level. But we also have, whether we get that or not, we have just an extension of the divergences that were in place before this rally back here, which was a, let me measure it out for you. That was a quick 15% pop in XLE. Now this is the the grandpa of the energy sector ETFs. You want to juice it up more, you go with the oil and gas equipment and services. That's XES. You get more bang for your buck if the charts are constructive, because these are lower price stocks, they're higher growth companies, they rise and fall much more than the big integrated oils, and you can see they're setting up nice divergent lows. So I think I've said this recently, to me this sector, although crude oil is in a bear market, make no mistake about it, as are the energy stocks, but from a risk reward perspective, or as far as potential bullish setup, these are my favorite within the S&P 500. Energy is one of the 11 sectors in the S&P 500. These of course are subsectors, XES and XOP. XLE is the energy sector. That's the one represented in the S&P 500, but these are nice, clean, bullish divergences that have been building for a while, and I wish I had stronger convictions on where crude was going. And I'd probably add these. I may even add these as official trades because the charts on themselves look pretty good. So there it is. How do you trade it? I'm not making them official trades yet, but I'm sharing it, and it's pretty easy. You have a divergent low right here. You don't have any hard buy signals, but charts are looking pretty constructive. Crude's rallying, so you can go long with a stop somewhat below the recent lows or wherever your entry is. Where does it go from here? Well, up to at least, I think, this if these continue to pan out, take out the downtrend line, at least at 815 to 830 area, maybe all the way back up here to 972 or so. That's XES. And then XOP, here's one, broke out today of this downtrend line. Again, this downtrend line was taken out here, and then we fell back below it, but I left it there. I think it's still valid. So like I covered back then, we had a divergent low at that time. We had a nice rally in the XOP, by the way, is exploration and production sector of oil and gas. It's a 26% rally. See, so there you had about double what you got on XLE, and that's usually the case. These guys are going to move up and down a lot more, and they trade pretty well to the technicals. So there it is, a breakout today, divergent low. You can go low. Go long with a stop somewhat below if you like it. Again, I'm trying to give you long trade ideas, and especially if the market continues higher. If the stock market continues higher, that shows confidence in the economy. Therefore, that's good for oil. It's good for the energy stocks overall. Should be. And if you want to leverage it up, a lot of people love the leverage ETFs. They just don't make good long-term hold vehicles. More of tactical trading vehicles. But there's Gush, which is the it tracks the same index as XOP. You're just leveraging up 300% there. So nice big, potential wedge pattern there, and most importantly, coming off a divergent low. So one of the better looking sectors right now. Okay, we'll wrap it up here. Long enough video, and I'm going to try my best to get this out to you guys before the close today. And if not, I'll do I don't know if I'll do a closing market update today, or maybe wait till tomorrow to see how Microsoft trades, because that's going to affect QQQ. We'll see. Either way, let me get this out to you guys, and we'll pick it up later today or tomorrow. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.